afternoon, folks. Joe Baker with Trade Pilot Pro. Again, a unbelievable day, and I have to say that we're pretty proud of ourselves on the levels we called. And our room today, as you know, last night's levels, I came within a tick from the bottom. Have to be a little shameless and give myself a little credit for that one. Um, I'm just going to pat myself on the back a little bit here. Anyway, let's talk about what's going to happen moving forward. The gloves are off, and the Fed is out swinging. Okay, for those of you that follow me over there on Elite Trader, I was putting out, or even in the room today, I was putting out the fact that the Fed put out 50 billion into the market this morning. Another 5 billion came in. It was like 50 billion out around, I think it was like 8:30. Another 5 billion came in right before the open, and then at about 11 o'clock or so, they came out with another 50 billion. So they put 105 billion dollars, okay, to work today. And then they came in the afternoon, and they really started putting it to work. That's for sure. So all that being said, how do we take this? Well, they're putting it to the shorts. They're calling it all in. Remember when they did this before, how much the market rallied? Well, they're doing it again. They're getting them all in, and these are synthetic buys. They're not real, okay? So, to get, obviously nobody wants to step up and buy this market. Who's going to buy the market? Okay, who's going to buy the market is going to be the shorts. Every short position is an open position. Has to be closed in order to profit. Or some of these guys want it to actually go out of business. They never have to pay tax on it. Even better if they can get the company delisted. All that being said, they have to cover, and it's going to buy the market, and we're going to go up. Unfortunately, when you do that, you hollow the market out, because when it falls, there's nobody there to buy to cover, which actually supports the market. Okay, so shorts play a very intricate role in the supporting of a stock market. Now, naked shorting is something all different. Okay, that destroys companies. So I'm just talking about shorting, not naked shorting or anything of that nature. But they're pulling them all in. Okay, they're all getting pulled in. Now, those that are naked shorts, okay, there's just not enough shares for them to borrow to short, so they're just out there without the shares. Now they have to come into the market and buy them. So, at any rate, that's just an idea of what the Fed's doing, why they're doing what they're doing. We got 47 days till election, guys. Come on, they cannot have this market be breaking down like this. And you can move a market. Trust me. The Fed is doing everything at its disposal. But however, I just have to warn you, if you eliminate the shorts from the market, I know they're not trying to eliminate all of them, but a majority of them they are. Going to make it very tough to short these stocks. And markets fall faster when there's no shorts in them. Believe it or not, they really do. So be careful after, I think it was January 16th, because that's when it can get real ugly again. Okay, all that being said, let's get back to the technicals. 1252 to the upside is going to pose some resistance. That's the 34 EMA. We use this all the time in our room. The 34 and the 200 are the two main ones. Different time frames, but they tend to work very well for us. Now, the 63 is another area. I know we all, we're using that 1263 forever. I cannot believe I'm actually talking about 1263 already. Yesterday I was talking 1072s. Now I'm talking 1263s. This is absolutely insane. We love this. So anyway, 63 is going to be a little area of resistance. It was before. Remember that 63, 67 area? And then down to that 52 area, because once we hit the 5150, we collapsed. So this is going to be an area I want you to look at on a daily, and I'm looking at these for where the market closes in relation to them. And I wonder tomorrow whether we're going to close to the upside range on this or the downside range. Again, under 1217, that gets a little hairy because we're getting back down to this 1200 area, and I think they really want to keep this market up in this area, up in this range until these elections are at least gone by. So We're talking what, another 6 weeks or so. So just again, look at the closing prices. It's going to be pretty tough to go over anything today, with what they've done. I mean, what we've rallied 100 points off the bottom since 1 o'clock this afternoon, and what is it, 11 o'clock. So we're up 100 points. God, if you think about it in relationship to the markets, whenever these actuaries figure out, when you do your investments, they always give you 8% a year. I don't think they actually meant 8% a day. Okay, but anyway, let's get over the daily levels. If you dare to trade this market tomorrow, I put together something that I think will hold somewhat. Just give me 1 second. Okay, here we are. I am bullish above 1217.75. Okay, my line in the sand. I'm a little bullish above that, looking for 1224.50, 1229.50. Breakout 1234 and a quarter, 1240, 1246.50 target with extension of 1253.50. Underneath 1217.75, I'm looking to hit 1212.50. Remember, this 1212 is a pretty big area. 1207.50, 1202.50, and then ultimately 1195.75, and then 1189.50 for the target now tomorrow. Now, right now, we're currently trading at 1231, so we're already in this little range here, this breakout range. Who knows what's going to happen? I mean, at this point, we're getting, what, 60, 70, 80, 100 point ranges. I mean, anything can happen, but I have to give something. I don't like to leave you guys with nothing. So I did send these out tonight. Hopefully there'll be some sort of guidance, understand the market that we're in, the volatility, who knows, maybe a little bit of a sideways move after we pop open. I mean, what are we up, a couple hundred points already. So I will speak with you all next week. And again, trade safe. Like I said last night, and like I said the days before, don't trade it if you don't have to. If you're gonna, please use hard stops. Okay, anything can happen, anything, rumors can spread, and you just don't want to be holding on to that, that contract or those markets when that news does hit those wires, either good or bad. All right, guys, take care and have a wonderful weekend. I will talk to you next week.